There's a famous saying in crypto, not your keys, not your crypto. What this means is that if you have crypto and it's on a centralized exchange, then technically you don't own it. The centralized exchange owns it. Whether the centralized exchange is Coinbase, Binance, Gemini, or in this case, FTX. I'm sure you've seen there's a lot of drama happening right now because of FTX. So I'll provide a little summary of what's going on. Because Binance, which is one of the largest crypto exchanges in the world by volume, was looking to bail out FTX, one of its main competitors. But Binance has now announced that they are pulling out of the deal. So let's start from the beginning. This all started last week when there were some leaked documents to show that actually Sam Bankman-Fried, commonly known as SBF, who's the owner and founder of the crypto exchange firm FTX, was at risk of insolvency, meaning that they didn't have enough money to cover all their customers' deposits. Apparently, FTX had not been backing their customer funds on a 1-to-1 ratio behind the scenes. So, a bank run was instigated, in large part by tweets from CZ, who is the owner and founder of the Binance exchange. Coincidentally, Binance was an early investor in FTX. Now, a bank run is when a lot of people all at the same time take their money out of a bank, or in this case, a crypto exchange, which then leaves the bank or crypto exchange with not enough money left to cover everyone. These documents had shown that Alameda Research, which is a trading and investment firm also founded by SBF, had its finances deeply linked with that of FTX, the exchange. Alameda Research and FTX are supposed to be separate companies, but apparently Alameda held a disproportionate amount of FTX's exchange token, FTT. FTT, the token, can be used on FTX, the exchange, to get discounts on trading fees. But the problem was that this FTT token, which FTX basically created out of nothing, was becoming illiquid, meaning that they were just kind of printing it and making money appear out of thin air. But since Alameda and FTX owned most of the FTT, this means that when FTT's price goes down, the balance sheet of Alameda Research and FTX does not look very good. So, when these documents started to show that Alameda Research had been borrowing millions of dollars against FTT, rumors started to spread across Twitter that FTX was loaning out user funds to Alameda Research and using its own illiquid FTT token as collateral. What this essentially means is that they were printing money so they could lend out user funds to itself. These rumors were far from confirmed, but it was the first inkling that customer deposits in FTX exchange were not as safe as one had hoped. CZ seized upon this skepticism in his tweet. He said that Binance would be unwinding its position in the FTT token over the span of the next few months. And CZ has a huge following on Twitter, so other people take notice when he says something. When he said that he'd be dumping his FTT onto the market, and he owned a lot of them, other people started to do so too. This resulted in a lot of panic selling of the FTT token, and the price started to go down dramatically, which then resulted in rumors of FTX's exchange becoming insolvent. FTX was then forced to pause their user withdrawals, both for crypto and fiat, and this caused chaos in the crypto markets. And then other exchanges like Coinbase and OKX, and perhaps even other firms, passed on SBF's request for rescue capital for the FTX exchange. So SBF went to CZ and to Binance to help them out to see if they can bail them out. But Binance's acquisition of FTX's non-US operations fell apart when Binance took a look at FTX's books. I say non-US operations because FTX has a separate US entity, FTX.US, that's not been impacted by the bailout talks or insolvency rumors. So a Binance purchase at FTX would have been similar to Bank of America's buyout of Merrill Lynch during the 2008 financial crisis. This ended up saving the firm from bankruptcy, and save depositors from losing all their funds. However, at that time, it did still require a subsequent bailout from the US government. But that's not going to happen in this case. There is no US government coming in, and Binance has pulled out of that bailout and the deal has fallen apart. Therefore, depositors in FTX risk losing some of their funds unless someone else comes to the rescue. This may or may not happen depending on the size of the hole in FTX's balance sheet. So, if a rescue doesn't come, the next step for FTX may be to declare bankruptcy. And the thing is, FTX is a massive presence in crypto and also in other industries like sports. For example, there's the FTX Arena, and they also advertise in Formula One. Whatever happens, this is not a good look for crypto. And it's definitely not a good look for SBF, who was once the golden child of crypto. He was seen as a savior earlier this year because he was helping out other companies that were falling under after the debacle of the Terra Luna UST collapse. This includes firms that were affected like Reals Capital, Voyager Digital, and Celsius. What's crazy is that all of this has happened in just a couple of days. And that's just how fast crypto moves. But the thing is, all these collapses that have happened, all these hacks that have happened, they don't actually speak to the core technology behind cryptocurrencies that have proven their worth time and time again, like Bitcoin and Ethereum. Anything just highlights the hubris of human nature, but it also has put a lot of damage and reduced the trust in the entire crypto industry. And it also raises questions with regards to other centralized exchanges and how safe your funds really are in them. Would it be better just to have your funds in your own wallet, such as a Ledger cold wallet? Well, we go back to the beginning of what I said. Not your keys, not your crypto. It's something that's been said in crypto for many years, and yet time and again, we are reminded of why it's so true. It's a shame what's happened, and I feel for the people who've been affected. I know someone who's been personally affected because they had a lot of funds in FTX and they're not sure if they can get them out now. I myself am affected because I had some money in Solana, and that's been affected in a big way because FTX owns a lot of Solana tokens. They were an early investor, and now they're likely going to have to sell those Solana tokens to recoup some of their losses. People know this, which is why they've been selling Solana, because they anticipate more forced selling of Solana from FTX. But hey, this is part of crypto, for better or for worse. And if there's one lesson we can take away from all this, it's not your keys, not your crypto. So, if you enjoyed this video and you want to learn more about making money, working smarter, and being happier, then check out this video here next, which I think you'll also like. See you there.